What's up, good people? All right, so I'm gonna start doing this weekly recap of the markets once a week, every Saturday. Check in with us here at Better Today Traders. My focus is basically just taking the market and making it digestible for people. I know the market can be extremely overwhelming and there's so much to look at, but my plan is over some weeks you'll start to understand how I look at the markets. Maybe take some of my insights and be able to utilize them to really succeed in the markets and make a lot of money. So I want to get right into it. We're going to start today's recap off with AMD. So as you can see, AMD, like a lot of stocks this year, is having a crazy good year. With the time of the year, with August and September being some of the worst months in the market, I'm expecting more pullback for most stocks, including AMD, Nvidia, Facebook, anything in the Qs basically. So we're looking at AMD. We're up. What are we up? Right now, year to date, we are up, or not year to date, from the lows of October, we're up about 114%. So as you can see, we've got AMD. It's come up. It has tested this major area of resistance, 123 on the monthly. These are monthly resistance levels right here. These, and it is coming back to finally test this 72 EMA. With, like I said, with August and September being some of the worst months as far as performance in the market, I'm expecting to see some pullback. As you can see, as soon as we closed here below the 20 EMA, we've been kind of just consolidating, but we have finally broken the lows and actually closed below the lows of June and July, July, just about July, August 1st, and with this big red candle here and this big amount of volume, we can expect some more downside. We've got price pulling back to this trend line, but realistically, this trend line was broken. If you actually draw it out from any of these other dates, we are below this trend line. So I'll delete that, and it looks like my assumption is we're moving down here to this 200-day EMA, probably rather quickly. So $100 is when I would look to probably swing some longs on AMD, or at least see price stabilize. So I'm looking for like a $100 low between August and September before we resume this uptrend in the market that we've been experiencing all year. As you can see, price had to fill this gap. We had a gap back here in May. Prices finally pulled back, filled this gap. So we could consolidate here for the next 2 months. I'm kind of expecting a pullback to $100. $100 is a huge psychological level. Most people are like, I'm gonna buy it at 100. I'm gonna buy it at 95. People say that the round numbers that they're gonna buy or that they're looking at are usually the psychological numbers that a lot of people look at. And it just so happens that the 200 is at 98.29 right now. I've got this trend line that is going from January through May, and we've touched it once in May, and I'm assuming we're gonna have to touch it again. Typically, trend lines like to get touched 2 or 3 times before breaking. So I'm assuming we'll pull back to about this $100 level. If we can break this downward trend line at that point, I would be looking to long AMD at those levels for a swing, maybe even for long term. I would actually love to get $100 AMD for the long term. The next ticker that we'll look at is everybody's favorite, Amazon. And as you can see, once again, since the beginning of the year, crazy uptrend. We are up currently about 68%. Um, and let's see what we got going on here. So we got the uptrend. As you can see, we've butted up against this here downtrend. But if you look from, this is about 2 years ago, the high was 188. We're about 138. Once again, we are in the worst time of the year for stock. So if the broader sentiment continues to be as bearish as it has been, I'm expecting Amazon to pull back to our upward trend line down here, which is very close to our 72 EMA down here at about 125. We do have a gap here from earnings. Amazon had an earnings beat. This gap is an unauctioned area that hasn't been traded recently. Now, one thing that I think is interesting is the fact that Amazon is pulling back to these highs here from about July 14th, between July 14th and July 19th. We all know, or what we do know, is previous resistance tends to become support. So I wouldn't be surprised to see some support coming in here at 135, maybe for a shorter term. But like I said, this is a tough time of the year, seasonality wise, for the market. So I don't know if Amazon will be able to hold these levels here, or if it'll actually just pull back to our 72 or our 100 EMA. But this is what I'm looking at right now for Amazon. I would love to see it pull back to this 125 and then maybe consolidate until late September, early October, and I'll probably punch the gas on some calls or some swing trades for Amazon. Love Amazon, definitely a top pick if you're a long-term investor. Buying Amazon while it's what is this, like 50%? Not even 50, 25% off the highs. 27% off the highs. Historically, a great place to buy. But yeah, we gotta wait to see what happens over the next couple months to see exactly how Amazon trends. We've got a trend line forming here. If it respects this trend line and goes down to about 130, 125 to touch the 72 EMA, I'm all over it. The next ticker we're gonna look at is the second best performing ticker of the year, Meta, formerly known as Facebook. Now, once again, we've had a crazy run in stocks this whole year. August, September, seasonality wise, is typically when things like to cool off and we can finally get opportunities to get in these runners. As you can see from the lows, which looks like the November lows to today, 240% on Meta. Everybody tried to count Meta out, but they've been very, very good about reducing costs and increasing efficiency so that shareholders can reap some benefits, get some returns. So I'm looking for Meta to pull back to about this. It's at about this 300 level. I'm thinking it'll probably dip down to about 295, 275 on the very, very low end down here by that 72 EMA. Is one of my favorite EMAs. And typically, around September, August, you do get a pullback to at least the 72 or the 200-day moving average, and then from there into the end of the year and in the first quarter of the next year, we can typically get a rally. So as of right now, I'm not looking to long anything on Meta because we have closed below that 20-day moving average as of the 9th of August, and that's typically my signal, my bearish signal. Especially with seasonality, I'm expecting some pullback. We just got into August, and typically the pullbacks do last until mid September, probably after the Fed can finally speak again, because we are going through that blackout period with the Fed. Um, Once we get some clarity from what the Fed is going to do, what inflation looks like, I would expect this uptrend to resume. But in the short term, I might buy puts on this. I might leave it alone. But I would love to see what happens if we get down here to this 295 ish level. If we can hold this 295 level, we will resume this uptrend right here. We got the uptrend coming in here. But if we break that 295 level, 275 looks like a area of interest. Ultimately, probably about 250. We've got this long term trend line from November that is showing a strong uptrend. It is lining up right here with that 200-day moving average, which I love. You know, the moving averages, I like to look at them as like a living trend line. So I can draw this trend line and it's stuck like this. But the 200, the 75, the 72, the 20, the 9, the 400 EMA, those move with price. And they just give you an average of the last 200 days in the market, or the 72 days in the market, the price, the closing price of that, the average closing price, basically. So I'm looking for some more turmoil in Meta before I'm looking to dip my toes in that water. And that's going to be a theme probably throughout all of the stocks that we look at today, just because of seasonality. I'm not expecting a huge crash in the market or anything at this moment. I do think that stocks are priced for perfection. So if anything does come out of left field, if any black swan events do happen, yes, we can fall. But as of right now, I'm not expecting those things to happen, because black swan events are rare occurrences, and they don't really they kind of hit you out of nowhere. And so over the long term, these top companies in the world perform well. Over the last 5-10 years, they've gone up. Anybody who betted against them has lost money. Anybody who bet with them has made money. But there are temporary pullbacks that may happen in February, March, September, August. Those are just seasonally bad times for the market. Good times to buy though. So I'm just utilizing this pullback in the market to kind of mark out my levels, what I'm looking for, and trying to see if I can hop into some of the best companies that have ever been created for the low, and ride them up for the next 3 to 5, maybe not even 3 to 5 months, 3 to 5 years. And that's my analysis on Tesla. We got a pullback coming. We did just close below the 20 EMA, which is a bearish signal for me. It looks like the 9 and 20 looks like it wants to cross. Maybe next week it will, maybe not. We'll see. Moving on, I want to look at the NASDAQ future, because I am personally a trader of the NASDAQ future, day trader of the NASDAQ future. I like to swing the Qs, which is the NASDAQ 100, the ETF for the NASDAQ 100s. So I like to keep up to date with what's going on with the Qs and the NASDAQ. And as you can see, we've got some weakness as of the last month or so. I did get short in the form of puts last week when we closed here below the 20, and as you can see, we've kind of been falling back ever since. I would love to see the Qs pull back to about 360, 350. I'm looking at the NASDAQ future though. I've got about 15K as a level, and then below that we've got about 14.8 or 14.5 if we want to pull back to this longer term uptrend from the beginning of the year. Once again, you got the 72, which is in between these two trend lines. This one is actually looks like it's broken. As of Friday, it was broken, so I'm expecting some more downside at the very least to this more longer term trend. This first trend started, I've got it from about the banking crisis that started in March. Ever since then, we've been up and stuck, but now we're finally getting this correction, this pullback. I would expect, since we broke this trend line from March, to pull back to this trend line from about January. So that's about a 15K for the NASDAQ future. Until then, and once again, we're in a very weak time in the market. So I would expect at least a pullback to the 72 or this 200, which is down here at 13.7. I'm not expecting a move all the way down to 13.7. Could happen. I'm just not expecting it. But if it does break below this trend line here about 14.5, we could definitely see a 13.7 NASDAQ, even down here to the 400 13.2, which lines up perfectly with some historical resistance here. I have some monthly support levels right here at 13.2, 13.2, 13.3. Those are the areas I'm looking at. So like I said, 15,000, 14.5. Worst case scenario, 13.7. Those are for some longer, for those of you who invest in the Qs or VGT or anything like that. Those are the levels I'm looking for on the NASDAQ. I do like to look at the NASDAQ futures because they run 23 hours a day, minus Saturday. They're the most up to date for the indices. And now, while we're looking at indices, let's go ahead and check out the ES, the SPY. This is the S&P 500 future ES. I don't really trade this one, but I do like to look at it because anytime somebody says the markets were up or the markets were down, typically this is what they're talking about. So just to get a gauge on where we are with the market in the current cycle that we're in, I do like to keep up to date with what's going on with the SPY, the ES. And as you can see, it's not much different from anything else that we've gone through today. You can see since about October or November, we've been on a tear, just higher highs and higher lows across the board. And once again, August, September, February, March, you start to see pullbacks, typically to the 72 or the 200. If we have another recession scare or anything like that, we might pull back all the way to the 400 or the 800. Not really pricing that in right now. Like I said, everything is priced for perfection right now, and every as far as looking ahead, things look better in the future. And you know, the market is a forward discounting mechanism. But as you can see, we've got the 9 and the 20 crossing here on the 9th, which is a bearish signal, at least in the short term, because these are short term EMAs. We got the 9 and the 20, the average over the last 9 days, the average over the last 20 days. We do see some short term turmoil. So I'm expecting price to pull back to the 72 or this 200 EMA. As you can see, I've got the trend lines and they're lining up, giving us extra confluence as well. So anywhere between 4,400 and 4,225 look like areas that I will personally be looking at and deciding if I'm going to hop in or swing trade the ES, the SPY, SPY that would be the ETF for the future, long-term holds. And our wild card for the day is Roku. My girlfriend really likes to trade Roku. As you can see, Roku has been beaten down over the last two and a half years. But just like everything else since the beginning of the year, what they say, rising tides lift all boats. So you see, we've been in an uptrend for Roku since about January. We were able to finally close above the 200-day moving average back in July, and looks like we had some pretty good earnings for Roku. They still losing money, but they're losing a lot less than was expected. So the market has priced that in. As you can see, we got beautiful higher lows, higher highs. Um, yeah, this one I'm not too keen on trading, but if I had to trade it, if I absolutely had to trade it, I'd probably be looking for about $70 here. I do like that it's pulling back to this previous high area right here, about 77. But ideally, I would like to see a move back down to this trend line that was started in from May down to, you see the 72 finally looks like it's trying to cross above this 200, which would be a bullish signal. But as of right now, it has not, and the volume is definitely tapering off since this earnings beat. Typically, though, you have an earnings beat, stocks do like to tend to trend in the same direction that the earnings beat went. So you had the earnings beat, we popped up from about 75 to 90. So of course it's gonna cool off, especially in this time of year, because you can expect prices of stocks in the market to cool off around this time of year. But once we get a little bit more clarity from the Fed in about the end of September, we should start to see the rallies continue. Roku Roku is not a top tier blue chip stock, but when it does get away, it can get away quickly. So we are watching. As you can see, there's some resistance right here with the 400 EMA, about 90, which is about 98 and 100, which is another psychological resistance point. 100, anything that ends in a 5, anything that ends in a round number, those are psychological resistance levels. Typically, because if I bought this stock at 50, I'm thinking, all right, I'll sell it at 100. I'll sell it at 125. I'll sell it at 150. Nobody says I'm going to sell at 176.54, So that's why we use the psychological levels. But yeah, if we can get a pullback to about 70s, mid 60s, low 60s, and get a breakout above one of these trend lines, these lower downward trend lines, I would look to get some calls, probably at the money, because I'm not trying to really risk too much with this. But yeah, guys, this is just the weekly recap. Be on the lookout for more of these from Better Today Traders. I'm Christopher. I'm your help. I'm your coach. If you need any other help from me, please feel free to reach out to me. I'm on Instagram. I'm on Twitter, mostly on Twitter at babyfaceyoung_ on Twitter. But yeah, reach out to me. I'm going to be doing these for a while until I get bored of them. So, peace out.